All right. Good evening, guys. We're gonna get started. We had a busy week with the news this week, right? We got a lot of USD news in the afternoon, and we got some GBP news in the morning, and also some bank or national holiday. So we're gonna see what we had this week. The purpose of this webinar or me talking is probably me sharing the knowledge I have, and I want you guys to learn from it so you can get better yourselves. And also a reason I want to give some more value to this group and build it from there, right? So it's the main focus, keeping the quality high and not really bumping the quantity too fast of a added chart or anything. We're just gonna build it from here. We are gonna add some charts in the form of a stock, and it will be the Tesla stock. And we're probably gonna do it midsummer, depending on my time schedule and also the one guy who am I teaching, and that will be announced pretty soon. Okay, cool. Let's get started on Monday. This was the chart for that morning. So red box, blue box, purple, blue box, and also the yellow. Let's see what the rules are for anyone who doesn't know. So the rules is to wait for price to hit the box. After that, follow the instruction from the color of the box described here. So a red box, when price is moving towards it to the upside, it's a sell area, right? So wait for price to close bearish within or under the box, right? If price moves up and closes above the red box, it will get a signal, right? It will get an alert that it's at the red box price, and just wait for price to close back within or under the box, and then wait for a bearish candle pattern. What is a bearish candle pattern? It's best to just show on the chart, and we will see if we will have one this week. But most bearish candle patterns I will look forward to is a bearish engulfing or something similar like half engulf, and then the candle after that is a wick towards the upside, always a wick towards the upside, because we want to measure the retrace so we can calculate our risk if the stop loss is within the parameters of the 10 to maximum 15 pips that we like to trade off. If it is and price is good and it flips towards the downside, what's a flip? It means when it goes from bullish to bearish. So the open of the candle becomes bearish, and that's where we enter. And when the risk is good, we will stay in the trade until TP1 most of the time gets hit. So TP1 is around 10 to 12 pips. I usually take 90% of my position. So that's the main focus, the TP1. TP2 is mostly when we got high volume in the market, high volatility, and that's when you get the TP around 15 to 20 pips. Another thing I do when TP1 gets hit, always put your stop loss on break even or maybe a little bit in profit, so you minimize the commissions you pay, and you will eventually, when you trade long enough, you will build up a good account and you can be profitable from it. Blue box is the other way around. When price drops towards it, it's a buying area. And when price is below it, we also have a box above price when you see the London boxes. It needs to close within or above. And when we see a bullish close, it needs to be a bullish close. And we see a rejection candle pattern towards the box, it will move towards the upside. So it's just reversed from the red box. So we need a bullish candle pattern. Most of the time it will be some sort of engulfing or a wick towards the downside. And when we flip up, so from bearish to bullish, at the open, we will enter and we will place our stop loss. Most of the time, 1 or maybe 2 pips below the wick. So that will be our risk area. All will be done from the M30 time frame, 30 minutes time frame. So I think that's pretty known for you guys. Purple box is a selling area. So when price is moving towards it, it will be bearish. And when it closes within or below, and we see a rejection candle pattern with a bearish close, price will move towards the downside. Again, similar candle patterns, a bearish engulfing, a wick towards the upside. When we flip towards the downside from bullish to bearish, it will be our entry. So we got the yellow box on the lowest point of the chart. It will also be a strong buying area. Why is it stronger than the other ones? Because it will be further away from the moment we open. And the open, I always say, is the London open. That, for me, that's 9 a.m. Depending on your time zone, it will be different. It will be a stronger buying area because it will be a stronger Fibonacci level. It will be a lower in it will be lower in price, right? So imagine that it's probably around 80 to 90, sometimes 100 pips lower than the open. So opening of price. And that will be a hard drop, right? A long drop. So there's gonna be some sort of correction somewhere, right? And that's usually around maybe the blue box or when it drops below the blue box. So no buying signal at the blue box. It will probably be around the yellow box. And again, rejection candles, we wait for the close of the M30 candle. Is it bullish? Yes. Okay. Is it within or above the box? Okay, good signal. Wait for the candle after that, and you can enter it when it flips up. Okay, let's see. We're gonna scroll down towards the 30th of May, beginning of this week. This is all March. Okay. So this is the beginning of the week. Plan for that Monday morning. We just explained the boxes and the rules we have with them. Also the Net25, plan for that day. Red lines are the trend lines. The green lines are the support and resistance. They all come from the support and resistance, that is. They come from weekly and daily. The trend lines, they come from the 1 hour. How and where I'm going to show in further on webinars. We're going to go into depth wherever you guys want to go. We will, or I will explain, and we can learn from each other. Okay, so day one, Monday. The opening is around this time. We got a bullish momentum towards the upside, right? First, we got the correction. We did not have a signal from the purple, and we just moved towards the upside. Good bullish momentum, but no close. So no close within the box, so no buying, not a close within the box. It's really crucial that you really wait because the boxes are all between 2, maybe 2.3-ish pips, and they are set at certain rules. So if you do wait, most of the time, let's say 8 out of 10, it will do what it's supposed to do. And that's following our rules. It will give you a profit. Or because you're using a good risk plan, we're gonna do more trades, and eventually after, let's say, 10 trades, you're probably gonna win 7 or 10, 7 or 8 out of 10, so that will be profitable. Then we will see a close above, so that's a good signal, right? It's bullish, and we will enter here. It first went down a little bit, and we got a good risk to reward. So when it flipped bullish, our entry was good, and the time was a bit off. So when the trade went live, and it did, it went straight into drawdown, and that was not really something I wanted to see. So I just scaled out the trade immediately, and I closed off the rest of the positions around -5. How do I do that, and when do I do it? That's probably something that we will see when the C trader is live again, because it's now under maintenance. I didn't know that, so we're going to do that when it's live again. Maybe we're going to do it at Friday night, maybe next week. So, and it will be good and live to trade as well. And we can go into depth why I stay in a trade and why not. For now, we're just gonna go through the telegrams. And again, another one within the blue box it closed. So good price action, right? Towards the downside, wick towards the downside. So what's that the signal of? It's a buying signal, right? Sellers got the overhand a little bit short of the time, and then we closed bullish within. Good rejection towards the downside, good risk to reward system is in place. So stop loss below the wick. Entry is at the flip of the candle. So when we went from bearish towards bullish, that's our entry. So it's a amazing buy setup. Timing is great. It's London close, right? Usually it's a continuation of the small trend you have, and this is the small trend, right? The first previous 4 or 5 candles, and it's bullish. And we went towards this high 1, 2, 3, 4, 5 times, right? And it's usually a break of that setup. So price action was fast, and that's how we like it, right? TP1 got hit, stop loss on break even, and of course you can close earlier, but I just leave it to the system to close it out. And this is the AEX for that Monday. The box is the buying area above the box and the selling area below the box. It doesn't really get easier than that. The most important thing to watch is the support and resistance lines, because they do really work great, and also the support from the trend line below and the resistance from the trend line above. So the buy setup was great, right? Price action good but slow, and price action good is that we got the signals from the candles we wanted. This is M15, by the way, M15 time frame.
Okay.
Good bullish momentum, closed above the box, above resistance. So that's all the facts. What did we retest? The trend line, right? So that's a good signal. That's also a confidence booster why I will stay in a trade longer, because you got some good facts, right? You got a close above the box, one above resistance, yes, became support, yes, that's good. And also the trend line got respected. So I kept the trade on. Why? Price action good. H1 is also pretty important. It's bullish. We got bullish momentum. Small stop loss. TP far enough room up to get that TP1. This is the room, right? This is the room you need to get that TP1. And TP2 eventually got hit around here, I think. You see, we broke above the resistance, became support, TP2 got hit, and then we just danced around it, came back to the box, some smaller reactions towards it. And eventually, when we got a 1, 2, 3, 4, 5 times, it got tested and we got a break. And this is the 15:30 candle for me. That's 3:30 my time, UTC +2. Timing is great, but again, we got the trend line and it just didn't give me what I wanted to see, the price. So I didn't do it. Why not? Price action was good, timing was great. Target, not really room, right? Because we got that trend line there. So I rather just leave the trade and not do it than risk it and maybe get my profit from the morning and give it back to the market. So also another reason too close to the trend line, right? Wait for the active momentum down to enter the sell. It did not happen, so no sell. So Tuesday, again, boxes are set. No purple box. Why not? It's too close towards the blue box. And we got support right here where we got a support signal, right? You will see that it moves towards the upside. So it needs to close below here, and these two boxes will probably be around, let's see, within 12 to maybe 15 pips. So that's not enough room for maybe when it closes a little bit below the purple box, right? Let's say 2, 3, 4 pips. It's mostly already in the blue box. So it will probably be more a buy signal than a sell signal. So no purple box for that. the plan for that Net25. We got that gap we wanted to close. So the pound dollar results. Buy setup, follow the rules, right? Closed above, good signal candle. Came back straight into the drawdown again. Similar setup like the day before, the Monday. So I closed -8. Why did I hold this a little bit longer? Because I thought we're really pushing price up, right? Like we got a lot of downward momentum, a lot of candles. It's, let's say, 1, 2, 3, 4, 5, 6 hours. We went against it, so engulfed 6 hours of work. So I was really not hoping. I'm never hoping again, but I was waiting for another pullback towards more of a break-even close, but it didn't happen, and we just went further and further downwards. So I just cut the trade at -8, and I don't really let trades run towards stop loss because it's just not good for the overall risk to reward. Another buy setup, follow the rules, bigger stop loss after the loss, but I waited this one out. Why? Because again, we went into a bigger stop loss than we wanted, further away than I wanted to see, and I was a little bit hesitant about the news that was coming out later on that day. So I just waited out. It was a little bit later in the session as well, so I didn't really do it. You see, the purple would have worked. It was a great setup, but it was a little bit closer than I wanted to at that morning. But it is what it is, and we got a good reaction from the blue box, right? Signal here, close above the box, retest from the box. The risk is good, so stop loss below here, entry here, TP1 got hit around here. I think it did 12-ish. So I closed around 10, 11. Of course, you will have a signal later on in the day, but I usually trade in the morning, 2 hours from 9 till 11, and then I will check it around 3:30, and I'll probably be watching it towards the London close around 5-ish. So I don't really trade after that. Why not? Because volume will get lower, and I usually am eating about that time. So Net25 results. Great bullish momentum, right? Again, close above the box. It's this candle we are looking at. Close above the box. We got a small little gap at the open. That's usually a sign that we will push towards the upside, or when it's towards the downside, it will be a bearish momentum sell. So great buy setup, price action, 2 minutes before the open, very fast bullish, right? Again, we're not gonna be able to show it right now because it's on maintenance, but it's all good. We will do it next week. But the last 2 candles on the minute chart were very bullish. So I was watching this 50-minute, it was all bearish, bearish, bearish. So I was waiting, and I was seeing that great retest at pre-open, right? It just pushed up and pushed up. It was like, I think around 10-ish pips, it went up. So in a matter of 2 minutes, with the open and all the manipulation from the day before, it's a good setup. And also the risk parameters are good. Even if price did not do what it did, it was still a good setup, and I would have traded it with a buy and a stop loss just below this week, 2-3 pips below. And also a close above resistance, right? And the trend line, so that's a good one. The open is off above the trend line. Keep an eye on yesterday's break of the trend line because it's a hint. It's a hint that we will probably be trading higher. And of course, TP1 and 2 got hit. We smashed through the resistance, retest, and we got some resistance around our key level support again. And then we go towards the 330 candle. Timing is great. Price action came to the trend line to do a retest, right? Near resistance, so not so great. Lower risk because of the smaller wick towards the downside. Stop loss is below the previous low. A little bit different than the GU because the Net25 moves a little bit quicker and it has a bigger spread, so it will tap you out when you have it just below the wick. So a little bit lower, a little bit wider stop loss on the net 25. Buy got the TP1. Same rules, I close around 90% at the TP1, and stop loss will go into profit a little bit above the break-even point. There's no commission on the net 25, but still it moves pretty quick with the spread, and you will end up in a small loss when you do it on the break-even. Plan for Wednesday. Now we got a purple box back again. The plan for that net 25 that day, still hopping on that trend line from the day before, right? We got a good open, good space towards the upside and also the downside. I'm already typing in the chat that I'm still looking towards that gap being filled because it will work as a magnet. So only one great textbook setup from the purple. Price action great, right? We got a lot of work being done right here at price moving up, down, making lower lows, right, and higher lows, and that's all good. So timing great, 15:30, magic for me, 3:30. Closed in or under the purple box, depending on where you had your placed. And we got a good signal from it. Good retest towards the upside. I went in at the flip and also a little bit higher risk. Why? Because it's a good momentum trade, right? It's all bearish. We've been bearish for weeks now. We got a small correction on the H4. We are making some ground to work towards the upside, but it's not really what we are looking at overall. It's bearish. So good trade, good engulfing candle. The signal candle is pretty good engulfing. We already tested it low day before, retest again, we closed below it. So it's a good trade. And also TP1 and 2 got hit with no hesitance of price. And that's what we like to see. So no signal here, right? Just pushing through, and that's all good. That's why we wait for a close within or above and then a reaction towards the upside. Same with the yellow box, no trade. Just a close below, and that's all good. Okay, let's do the net 25. So the open, great price action, right? Close below the support, closed under the box, good price action. Why is it good? Because we have tested this trend line or low, whatever you want to call it, like 1, 2, 3, 4. Is this the 5th time? Maybe 4th, 5th time, depending on how you count. But it's testing the trend line. That's something you can acknowledge. And it closed below, so it's broken in my eyes. TP1 got hit because the next one got the rest taken out. Another great trade because I was really aiming for that gap being filled. Closed under the trend line, tested it 4 times, so 5th is a break. Price action is good. Why? Because it's a bearish candle, and that's usually exactly what it is at the net 25. You don't really have to compare it to any Forex related price action rules or maybe some experience you have with that. So target is the next support. TP1 and 2 got hit, really fast trade. High risk setup, no, because if you follow your risk plan, it will always be the same risk or a smaller risk. So in the end, what's the end? Maybe the end of the week or maybe the end of the month, depending on how you count, or maybe the end of the quarter, you will be in profit if you keep it the same risk. Amazing sell setup in the afternoon. Again, I was waiting for that gap to being filled, acting like a magnet, and we got a good base towards it. Retest of that trend line. Yes, closing bearish. Yes. What do we see here? Wicks towards the upside. So buyers are trying but not succeeding. Follow price and adjust if needed. So gap will probably work like a magnet. Yes, 50% closed at the TP1. Why do I not close 90% at this time? Because the gap was a target of, I think, I'm not to be sure, 70 pips. I think it was. I got my TP around 65-ish, so it was pretty amazing day. It was a little bit hesitant around the trend line, but it just broke through, and we were so far into profit that it wasn't really terrible to close around that, but I waited till TP. So the plan for Thursday, again, just follow the rules. When price hits the boxes, the Net25. Again, we got a small gap, but with a trend line, so it will be somewhat of a setup that you will want to avoid because it will be hesitant around the gap to close it, but also the trend line is near, so it will hit it or not. And the same goes towards the downside, a smaller target, right? So if you close below, it will be around, let's say 702-ish, and the target is around 701, around 15-ish pips. So this was a day that is also the day before NFP, and it was also a pretty big news day with the ADP, so ADP. So it will be a open that I will want to wait and see maybe the next 15-minute candle after the open at night. But first we will have the pound dollar. So we got a red box and we got a blue box trade. A good buy setup a little bit later in the London session. So I adjusted my lot size, also followed my own rules. TP1 got hit within these two candles. Why did I held this trade a little bit longer? Now, what do you see? A big bullish momentum trade, right? We closed above a area of interest for me, that is. It's also based on the rules behind the boxes that are the support and resistance trend lines, but that maybe have been broken or maybe retested, and also a fib level. And the last two things you can only see when it's happening, and that's the price action and what's my risk, and that's small risk, so that's why I kept it running. Textbook sell setup timing not great because it's a little bit between lunch and also New York Open, so that's a area that I don't really want to trade, but I got a good signal. We just tested the box, a bearish candle, so that's a good signal candle. Price action is great, TP1 got hit. So we got a retrace towards the upside, so bullish retrace when we flip towards the downside. So when the open becomes bearish, that's our entry. Stop loss at first is around, let's say, -8, 9, 10, but when it's in profit, around 4, 5-ish pips, I just lower it towards the wick. Why do I do that at this setup? Because you don't really know what price is going to do, right? You can maybe get this one at that time, and then you would probably get stopped out because it's around, yeah, it's more than 10. So this would be a stop out, but it didn't happen. We just got our TP1 and that's all good. The rest of the position got closed at the candle next to it. That's why I always say, if you got the luxury to do it at the C-Trader, put the trailing stop on, I think it's called, and let it hit when your TP1 gets hit. Then the stop loss will move towards break even automatically, and you don't really have to think about it, and it's just smarter in the long run. Because why is it smarter? Because you don't really get involved into the trade. You can just let it be, and of course you can manage it if you want, but you don't really need to decide at that moment, because usually you got a little bit of greed, right? And you don't want to diminish that to a very low percentage of decision making and let the computer do the stop loss to break even, or just close the whole trade right at TP1. Why not? In the long run, it's profitable, and that's all good. You got your trade done, you follow the rules, you got your money, and you can build from there. So great timing. New York session is all in the way. We got good bullish momentum with this bullish candle towards the upside. So high bullish momentum. Previous candles showing direction like a finger, if you might say it like that. It's a small body with a long finger, so showing direction. You can also say it's a stop hunt candle, right? So most of the people that are not trading the way we are probably seeing it that way, but you will see that it's a bullish candle, right? And it's not bearish. If it were bearish, it was not a buy signal for us, and it would have been a sell signal maybe for somebody else, but not for us. It was a close above the box, small retest, entered a little bit later, but we got our TP1 and 2 within the first 13 minutes. It just followed the rules, the price action. That's what we like to see. So last but not least, the Net25 for that day, the Thursday. Small gap, just like we talked about, and it's also after the fact, right? But the plan is before, so that is my little text I sent in the morning in the group that these are the things I'm thinking about. This is the news. This is maybe going up or maybe going down. This all depends on what price will do. I'm not really judgmental about price. It just shows what it shows, right? It is what it is, and just trade it from there, what it will show you, and trade accordingly towards your plan. So it's not really showing the line, but it needs to go towards here, to this candle. It's a good buy setup. Price stopped me around 8 pips in profit because it was just hesitant to fill the gap, and also a little bit, if my trend line is a little bit off, it's off, right? And it doesn't really matter. You just do what price does, and it was closing around the 8-ish pips profit, so I just closed the whole trade and it was good. So you see after the fact that it was a sell signal and was a good close, timing not so good, and also Thursday afternoon. No, it's Thursday late in the week, but it's still in the London session. Price action, no retrace, and the target is okay, but it's no sell for me. And I want to see some kind of retrace where I can maybe target my risk for this stop loss to be set. So great reaction towards the trend line again, also support, right? Support, close the bar. Reaction towards the box. Didn't really trade it. Amazing buy setup. Timing is great, right? London close, price action, great retest of the broken resistance became support. Risk is small. Why is it small? Because it's way within the -15. I just follow the momentum. We just build it up, fake one, and that's why I don't really watch around that time. How many times did we test this box? Let's say 1, broke it, so it's a signal, right? Same as I think it was Wednesday, right? Tuesday we broke the trend line towards the upside, and Wednesday we eventually traded towards the upside, or maybe it was Monday towards Tuesday, but it's similar, right? It's just a signal that we may be trading higher in the afternoon or later on in the session. So good close above, retest, not really my entry candle, but this is my entry candle. Why? Because it's within the timing and I wanted to wait for the London close. London close is usually a continuation of price or a reverse of price, but this is a good buying setup. TP1 and 2 got hit, so that concludes the trades for this week. And that's also the end of the week that we had together. And also the first webinar. So I hope you guys liked it. And if you have any questions, just write them to me or write them in the chat. And maybe you have any suggestions what we should do maybe next week or next webinar. I'm not really sure yet, depending on the people who want to join. So thanks for your time, and we will see each other soon.
Thanks, Martin.
Thanks, Wayne.
Thanks, mate. Helps clear things up.
Thanks, guys. Have a good evening.
Thank you, Martin. Much appreciated.
Yeah. Thank you. Thank you.
Thanks, mate. Speak soon.
Have a good weekend. Thank you.
Thank you.
And
Bye.
you. Bye. Bye. Bye.